Welcome to the channel, guys. In today's video we're going to discuss the real estate market outlook, especially as it pertains to with all of the new economic news that has been popping up on the news in regards to the banking failures and the interest rate hikes and all these things that have been affecting the market. We're going to talk more about what it looks like, what are the risks that currently exist, and discuss more in detail what you should do as a real estate investor in these uncertain times. So without further ado, let's go ahead and get started. So let's look at what's going on currently. So as most of you have been watching in the news, the Silicon Valley Bank failure was one of the big ones lately. But also, even beyond that, though, we have noticed the market conditions changing. The stock market has been going down as of the beginning of the year, even towards the end of last year. And then you have, bank failures that are happening, mostly regional banks that are failing due to high interest rates. So when you add all these things up, this typically translates into signs that will negatively impact the real estate market. More specifically, as more banks struggle and go down, what may potentially happening is that banks will start being strict with their lending, as there's less money for them to loan out, less options for borrowers, which means there's going to be less people shopping for real estate. So typically that will translate into a housing crash, so to speak. It may not necessarily be a hard crash like 2008, but it may end up being some level of pricing decrease. Some analysts predict that we could see as much as 10% pricing decrease in real estate for most areas. Some parts of the country we already noticed house prices going down well below 10%, well above 10%, and so that's probably going to continue. So in terms of what that means for the real estate market, let's dive into what all these economic conditions currently translates to. So if we look at it from a real estate perspective, what does that mean, right? So if we look at the residential side, right now, with high interest rates coupled with more and more people staying away from purchasing a house, and you add the fact that with high interest rates, there are people who have a low interest rate locked into their current mortgage and their current house. So they're less likely to sell their house because they're going to end up getting a new mortgage that's going to have a much higher interest rate on a new house. So there's going to be less inventory in the market, less people are going to try to sell their property, but also there's going to be less qualified buyers or buyers that are going to be in the market to purchase a new house. So all of this will translate into a pricing correction. That's what most analysts are predicting. It's going to be a pricing correction instead of a full-blown crash like 2008, meaning if your house had went up significantly in the last since 2020 and 2021 through 2022, more likely there's going to be an adjustment, a price correction of as much as 10%, maybe slightly higher depending on what part of the country you're in. So from a residential real estate market perspective, we're going to see a pricing correction of about 10% is my prediction, and that's what most analysts are saying. And this is going to be this year, probably up until the beginning of next year. A lot of things that can change, that can affect this outcome, is depending on how the interest rate goes. If the Fed continues to raise the interest rate, and if the banking sector doesn't get stabilized, unless there's going to be more failures, bank failures that are going to be popping up in the coming weeks, more likely we're going to end up having a pricing correction, and that's about it, and the market should stabilize by next year. Otherwise, we may end up dealing with a much protracted problem if more banks start failing, and that in turn creates a much more stricter restrictions or banking mortgage qualification restrictions, which will limit the potential buyers even more, and which in turn will create a much more a depression in the pricing of real estate, residential real estate. But that's the unlikely scenario at this point, but again, it's a possibility. Now, looking at the commercial side, on the commercial side, one of the big things that are affecting that is being affected by the current economic conditions is rent prices. Rent prices have kind of leveled off. They significantly went up in 2020 through 2022, and then this year they've kind of gone down slightly to, it's still slightly higher from a historic percentage perspective, but it has decreased year over year, and probably will continue to decrease. Again, there will be a correction on the rental side, so this will going to affect the multifamily side. Multifamily commercial is probably going to be a lot of deals on the multifamily commercial side coming up this year as rent prices go down. People that have bought their multifamily properties in the last 3 years for a low cap rate, and as interest rate goes up and they have to refinance to a higher rate, they're going to end up getting squeezed, losing money. As a result, they're going to sell at a much discounted price. So this is where I think the biggest opportunity lies, is multifamily commercial deals. Units that have 5 or more units are going to have the biggest potential, biggest opportunity probably the coming year, because that's going to be the one area that's going to be affected significantly. In addition to that, you also have the retail and office space and commercial side that's going to be affected, but that's just going to be a continuation of what it was already in decline. Retail was getting hammered even prior to the pandemic. It was one of the negatively impacted commercial real estate sector, and then office space as well. The pandemic decimated the office space sector of the commercial real estate, and now with the economic conditions and the banking failures, that's going to get exacerbated. So more issues to come for that area, but from an investor perspective, an opportunity to pick up heavily discounted properties and to potentially make a good profit. So with that being said, guys, this is the current outlook based on the current conditions, economic conditions from the stock market and the banking news that have been popping up. As things progress and things change, I'll keep you updated and kind of give you a forecast. And I may give you an example of deals and comment below if you want to see those type of videos, or I'll give you an example of what type of deals are going to be more common with this condition, with this economic condition. All right, guys, with that being said, then, thanks for watching. Don't forget to subscribe, like the video, and comment. And until next time, take care, guys.